What's going on, guys? Bexio back, and today we had a brand new video on Bitcoin because there's a lot of uncertainty, ups and downs, volatility, and people trying to predict what's going to happen in the future based off things that happened in the past and the 4-year cycles, which I think are probably over. And there's a couple things to look at that has completely changed and why they probably aren't a factor to look at to predict what's going to happen in this bear market and everything going on. But before we jump into that, if you're not subscribed, smash that sub button because we're there to 1,000 subscribers. But let's take a look at some of these Bitcoin charts here. The first one is the halving. So these are the halvings. You can see epoch 1, 2, 3, and 4. Those are all the halvings. And you see obviously Genesis, which means the start of Bitcoin, the first block to the first halving is the first epoch here. And then we have first to second, second to third, and where we currently are right now. So we have obviously the beginning one. This one, just massive volatility, brand new. You can't really compare it too much just because it was just starting out as a market, but it still kind of fits in all of these. So, but the next one, you have this section that people would call the bull market where it rallies up, and then this section where people would say it's the bear market, and obviously the same thing for the next and the bear market section. And then we have where we are right now, and people trying to say that the bear market section is got to be coming up, or it's coming this year, or it's going to be after this year. But lengthening cycles have been a thing, and then obviously with lengthening cycles, at some point you lengthen so long that you go into the next halving before that lengthened cycle completes itself. So that already breaks the 4-year cycles right there. But even for these, you can see that there's still not a lot of correlation between everything here. I mean, 2017 was a pretty massive run up, then coming back down. 2013 was this run up to kind of this slow period to another run up, so not the same as 2017. Then the first one was obviously just massive spike, and then people who bought for $1 or for a cent made so much money. That sell off, and then keeping this interest here. So it's insanely hard to compare any of these, even from a chart, because they're not the same. And then when you look into the fundamentals of them, they're nowhere near the same. The hash rate kept going up, wallets kept growing, and what we see now is El Salvador already adopted Bitcoin, made it legal tender. The IMF is begging them not to go back on that and not have Bitcoin as legal tender. And now we have Turkey, a potential country to adopt Bitcoin again, and Russia is a potential company or a country to adopt Bitcoin and make it something. So we have this whole global country setting now, where before it was just retail, it was just everyday people or really techie people who could try and find Bitcoin and even buy it. Now it's available to anyone, super easy to get. You can buy it, sell it, no problem, and it's just getting easier to integrate with. So we went from people being the main source of this liquidity of trading and buying Bitcoin to all those people still doing it, still stacking sats, companies coming in, adding to their balance sheet, and countries coming in, making it legal tender, and going around the world to other countries that now might make it legal tender or at least adopt it in some way or form. So it's the growth and adoption is gone crazy. Also, if you look at just the Google trends for Bitcoin, so we see it's very kind of hard to look back to when it started, but even if you look back here, this like 2012 moment, it was around this 1 to 2 level before the spike, came back down to that 1, 2 level, and then you see the spike in 2013, and ultimately came back down to this 2 level. It was a little bit higher, just barely slightly higher. Then we see 2017 around these 5, maybe 3 to 5, you call it, with a massive spike and then a massive collapse to back around these levels. And this one was higher than obviously the last. So we had 3 to 5. This one kind of around this 10 mark on average, let's say. And right now we see a massive shift from that, where we did see a spike in interest and this kind of weird double spike here, and then it fell. But it is not fallen back to this 8 or 10 level. It's actually double that and holding it. So what this would say is people are still interested in Bitcoin, or more interested in it now. They want to keep up with the news. They want to see what's going on globally with it. They want to continue checking the price. There's not this group of people, or even majority of people, who got into the market maybe near the top, and then you see this downward move and they abandon it. They don't care about it. They don't want to keep up with what's happening in the space. They don't want to keep up with the news, the adoption, the price. Crypto Twitter wasn't the thing in like 2017, or if it was super super small compared to what it is now. So there's just so much more interest that's built up on Bitcoin, that these 4-year cycles and people paying attention to this and seeing this drawdown and saying, this is the bear market, this is where we all buy in. And if you're waiting for that, chances are you're not going to get that opportunity. It's going to go a little lower, and maybe you say it can go, if it goes just a little lower, I'm all in, and then it starts to rally. So usually that's how markets work when they're kind of in that phase. You look for it, and if it's going to a level you want, or a level that the vast majority of people are just looking to throw all of their money in, there'll be people who front run it and it'll get a little bit of a rally, and then you have to decide what to do there. Do you buy in? Do you wait? Do you sit in the sidelines? It's just a pretty stressful thing to do, trying to wait for a bear market. And also, even something not in Bitcoin's control, or not part of the Bitcoin network, or fundamentals, technicals, anything about it, the Federal Reserve, obviously we know their balance sheet has 10x'd since 2008. We can see it was around $800 million. 800, $900 million. We go to today, that is $8.8 billion. So it has 10x from where it was before. And these trends, so basically 2008 Bitcoin came out, and you see massive spike, the financial kind of crisis, bailouts, all of this stuff. And then we see it kind of going on its way. And then we see where it happens right now, with massive spike, and then a massive just continued move up. Basically, money printing out of control, money policy out of control. How do you tame this back in? And it's looking like they might be running out of options to really do that, to lower the balance sheet, stop printing money. And obviously, the more they do that, the less valuable dollars can become in people's savings over time. That's going to compound and really be bad. And that's what Bitcoin can serve as, and has that reputation as like an inflation hedge right now. I don't think that's a great mindset for Bitcoin. I don't think that it's really an inflation hedge against this types of stuff. It's really its own asset and monetary policy, global asset, payment rails. It's so much more than just an inflation hedge. But there are people that see it like that. And when you see these charts, when you see the Federal Reserve going and the balance sheet going parabolic, it gets you a little, weary of maybe they're getting a little out of control. And how do you go from almost $9 billion, and how do you, get rid of that? How do you get your balance sheet to go down without completely devastating every single market that you can think of, or the stock market, the mortgages, and the housing market, because they're all intertwined into the Fed right now? You cannot sell off your balance sheet like that. It's just not going to happen without massive drawdowns in stocks and real estate. And just to end this video off with some of the news that came out today, we see that the Fidelity Spot Bitcoin ETF was rejected by the SEC. Spot Bitcoin, just too dangerous for the US. Canada's got a Spot Bitcoin ETF. Brazil's got a Spot Bitcoin ETF. Tons of places in the world have Spot Bitcoin ETFs, but, it's just too dangerous in the US to do that. So that faces how we're all feeling right now. Just get the Spot Bitcoin ETF out. Why is this such a problem? Why is this such a headache? It doesn't make any sense. They have a futures Bitcoin ETF, which makes even less sense, because the amount of complex that goes into derivatives and futures instead of just a spot one doesn't make any sense at all. They're not protecting anyone. But that's the Bitcoin 4-year cycle. Obviously, we have super cycle theories of, Bitcoin going to $1 million. That's what people think is a super cycle. But the other one that is a super cycle would be not having this ridiculous bear market. And we could be seeing that right now, or we could be seeing just a complete move away from this 4-year cycle where it goes up and down. It reacts to macro market environments like what the Fed doing with interest rates right now, things that happen globally, and Bitcoin does its own thing. But the one thing we know for sure is no matter how much the demand goes up for Bitcoin, there can never be more supply come out. That's not the same with gold. Maybe not even the same for stocks. Companies can issue more stocks. If the demand for gold skyrocketed, there would be a ton of people going to mine more gold to get more out. So that's something that just you cannot do with Bitcoin. You cannot get more supply. Doesn't matter what the demand is. But let me know what you think of the 4-year cycles. Are we going to do super cycle? Are the 4-year cycles intact or are they breaking? And as always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.